What's going on, everybody? Tom here with another video. In today's video, we'll be talking about why this level is the most important level to be looking at in the markets right now. We'll also be talking about our technical analysis zones for the SP 500, Nasdaq, Bitcoin, Tesla, gold, and more. Yesterday, to put it simply, was a bloodbath in tech stocks, especially hyper stonks. We saw a massive sell-off across the board, and I'm sure a few people out there are hurting now. The question now remains is, where does Wall Street want these stocks to be, and where is this turnaround going to happen? Let's see if we can answer that for you right now. Stay tuned. Okay guys, well, as we like to do on this channel, let's take a look at what happened yesterday in the markets. And I think looking at this heat map of the S&P 500, it's clear to see that it was all about technology. Semiconductors specifically just got beaten down very heavily. Then we had, of course, Amazon, Tesla, look, more semiconductors. It was really just getting hurt. The healthcare sector did okay, and the other sectors actually were up. So it was a tale of two kind of markets, and that's what we have seen recently. Sometimes it's been tech up and the rest of the market down, and sometimes it's been tech down and the rest of the market doing okay. That's reflected in these indices charts. You can see the Dow Jones only just closed down, and then you can see the Russell and the Nasdaq were leading the charts, 2.58% and 2.54% down throughout the day. Technology was the weakest sector, 2.52%, consumer discretionary as well, and of course communications, all of the ones that have been doing well recently were down there through that point. And then we had the big defensive sectors, utilities and consumer staples doing the best. This is pretty normal. Basically, utilities, consumer staples, healthcare, real estate, they're kind of the defensive go-tos in the market. And whenever you have a down day in the general tech sector, you'll usually have a bit of an update in those markets. We've talked about that a lot on this channel. So we are still in earnings week, and of course all earnings weeks, and we're going to see more earnings coming out. I do feel a little bit for hyperstonk holders because Palantir is coming in for a Tuesday market open, which of course will be live streaming on this channel. So make sure you subscribe if you want to come along and have a look how that works out. Then we've got Lemonade, Fubo, and others coming out at the back of the day, including EA as well. Now, in a market like this, if Palantir cannot get a good result out, unfortunately, it could move quite a lot, and that could be unfortunate because we've broken some key levels of support. But then on Thursday, we also have some other very important technology companies. We've got Alibaba, Airbnb, and then of course we have also Walt Disney, all coming out with earnings on what I think is probably the biggest earnings day, being the Thursday. So we alluded to the fact that Wall Street was punishing tech a little bit last week with the fact that they were squeezing tech stocks and net sellers of tech stocks over the last 10 days. Now, has that manifested itself again? It looks to be so. When we were live streaming, we were looking at the markets, and we just basically decided the only market that was showing us any clear pattern was pretty much the Nasdaq. It did start to sell off. We'll take a look at the hints there so you guys can learn from that in just a few moments. But yeah, look, it looked like the rest of Wall Street wanted tech to go down. The question now is, how far down did they want it? If we think about what's happening across the markets, it's really just been a huge manipulation recently. And we have been saying on this channel, it's really about day trading more than anything else, because investing right now, other than if you're holding long term or you're finding some of the older companies, technology has been very hard to invest in, probably since around January, I guess you would think, in the markets. Ever since that whole GameStop situation started, things really have become more turbulent in the technology sector. Let's now have a look at the technical analysis. We'll start off here with the VIX, or volatility index. Now, this is the volatility index for the S&P 500. You'll see in the background here, very important. If you're doing the volatility index for the Nasdaq, it's going to be a lot higher. So we're about to see a breakout above 20. Now, if we get a closure above 20, I think that's significant enough to say that the market wants to continue to go sell off or short or correct or whatever you want to call it. And that's going to time in well with a key technical level that we've been looking at on the S&P 500 as well. So Nasdaq, S&P, VIX, they are all correlated, of course. We'll check them out. Then we go over to the dollar index, and I was actually sitting on the 1 hour this morning having a look at it, thinking, hey, you know, I need to check this out because it looks like we're starting to see a little bit of base formation here in what has been a relatively shorting market. We've been very short on the dollar index for a little while, so we've been selling it. However, now we've started to see this little bit of a base. We've got a trough, a lower trough, and we've got 3 kind of equal peaks. Now, if we get a little closure above here, I think we go and test that trend line, then maybe we'll sell off, then we could move further up if we broke through that. Because what happens if the market goes down? Often people look for safe havens, and those safe havens are things like the US dollar. But notice these 2 rejections here in the daily. You can tell that this 90.33 area is a very important resistance. And if it closes on the smaller time frames, I'm sure scalpers, day traders, even some swing-based traders will be paying attention to that in the markets. It's an interesting zone, especially when you consider the fact there's this pin bar or hammer that's come off recently in the last day. So we'll keep watching that. Now, dollar index always leads well into gold. So we saw gold, probably the best trade. I think gold and silver were the best trade from the last week. They were very, very simple. They were very consistent, and they had some great technicals. Now, we hit the 1845, and I think what we're doing is we're basically coiling before this 1850, because on the daily we have a 200 simple moving average. We also have previous resistance around the 1850 and a key psychological point. So I expect gold to kind of hover around here. And remember this, if the S&P 500, a lot of people think, oh, gold hedges, but actually if the S&P 500 starts to crash and it moves over like 3 to 4%, gold tends to actually come with it and decline. Now, I know that seems really weird. Why would it? But that is what it tends to do once the market goes too far down. So be careful with gold. It kind of hit our first take profit, which was that 1825 zone. That was the double bottom. You'll see it drawn here. This is where we wanted to get out. I think that's really, really nice. And now it becomes a swing trade. What I'm looking for in gold is a new high, break through the 200, retest from the top down, hit one of the moving averages on the smaller time frame there, and then swing trade it up into the 1875, into then the 1960. So there's still opportunity, but I just want that little bit further confirmation. The same goes for silver. I think silver's strong up to 28, but then it has to break through and get through 28 first. We'll spend a little bit less time on cryptos today. Here's our Bitcoin chart. Of course, Ethereum is still one of the strongest cryptos. All cryptos dropped yesterday, pretty much across the board, especially things like Doji. They got mutilated since the Saturday Night Live. But I just want to say we have no clear direction on Bitcoin. I've got it trapped between this 53 or 52.8 zone and 60,000. I think if we break above 60,000, then we trigger a very nice uptake or uptick for Bitcoin. And I think once we're in the middle of this zone, we really don't have clear direction. Unfortunately, there's nothing in here that tells me that we're bullish or bearish. We're neutral. But once we get above 60 or we get below this level, you know significant moves will occur. And sometimes being patient is what's key in the markets. Let's now move over to Tesla. Unfortunately, Tesla holders, Harry out there, if you reach our live streams, you'll know who Harry is. He won't be very happy today, I'm sure. Unfortunately, Tesla really did break through the demon zone. 666 got completely smashed through. And I guess we saw it in the smaller time frames. I was trying to remain optimistic here, but there was just no strong candles. Like whatever you look at here, it was going to have to do a lot of work. I mean, we kind of decided at one point that 683, 685, if it had closed above there, I think day traders would have come in and tried to push it towards 710. That didn't happen. It broke to the downside instead. And then this now pushes the rhetoric of 625 to 600. Now we've already hit 629, so I still think 600's on the cards. If we think about the round numbers, we think about where it went to before. See over here, the 600 zone. Tesla's starting to look very weak in the market. So maybe this is the market saying, hey, we want to see not only good numbers, but we also want real profit without government intervention, without those government subsidies. We want to see you prove to us it's time. Sometimes the market will do that. And eventually every stock has to prove to the market what it can do. Even if we see in the future what it can do, the market will eventually say, I want it now. And maybe that is what it's doing for Tesla. You may disagree with me, but that will happen at some point. Now, the good thing for you guys is if you have super bullish kind of momentum, let's say this got obliterated down to the next level. Let's say it came down to 450-ish zone, which is a very clear level of resistance and support. Now, if it came down there and you have very, very, very bullish fundamentals on it, you believe you can see something that the market can't yet. We know that with Tesla, the market often can't see the future here. then you could potentially say, okay, I see a price mismatch and take advantage of that. So that's the beautiful thing about the markets. There's always two opinions, but maybe this one is, I mean, this has been very weak now for some time. So 600, I do expect some buying pressure. 625, possibly there'll be somebody. And then, of course, under 600, I do think we start to think about exposing 450. And no one's going to like that. But yeah, it's that next level. There's a huge gap in here. And you'll notice in the weekly, we never closed underneath the 600. So this is why I'm looking at the weekly chart very closely. Let's say laser eyes are on this chart right now. Let's move over to the Nasdaq. So the Nasdaq got really hit up yesterday. Massive sell-off occurred. It was really, really large. You can see here on the futures, it's continued selling off after the market's closed, and it's hitting this 13,200. So right where the previous body closes were, 13.3, 13.2 should be where I would expect some buying pressure to come in from the Nasdaq, but it's got a long way down to go if it continues to want to sell. 12.7 could be where it finds the next level of support. And that's pretty consistent with that May chart that we showed everybody earlier. It's not the SP 500 that's falling over, but certainly the Nasdaq is. Now, I want to show everyone what we were looking at yesterday coming into the markets. This was on the futures, but then I want to show you the QQQ and the similarities and the problems that we had. So firstly, this was what happened after non-farm payrolls. Bad jobs numbers, supposed now, oh wait, that means we're going to get more stimulus. You know, it's a false economy in many ways. So we have two big rejections here, guys. Look at this, two big rejections followed by a market that opened right on this level. So right where you would expect it to start having problems. Now, it's not about the futures, because remember the futures market, a little bit of fake news on the futures market. But when we scroll over to QQQ and we go down to the 4 hour, things are going to become more clear. So see here the price action and how much smoother and clearer this is. This is why you should always do your analysis on these charts whenever possible. We had our clear level of support, and we did this on the live stream. Then we had our resistance. We had the rejection, which to me just looks like literally a shooting star or pin bar rejection. We had two moving averages, and then we opened up underneath that with a confirmation in the first little part of the market. Then we saw that mega sell-off that's occurred. Now, it closed around the 325 here, and you'll notice that around that 325, 324, there is a huge level of previous resistance, which should act as buying pressure, plus a 200 simple moving average just behind it at 323. So we scroll out a little bit, and then we have to just make a decision is, does this 200 simple moving average hold the Nasdaq up? It's a very key area that you would think would find buying pressure. It found buying pressure a little bit last time, struggled, of course, around this zone, then found it again. So I expect the market to actually open a little bit here. Now it's down coming in. So we're talking about a 13.2 number. Will it recover by the time the market opens in tonight's session? It's right around the correct area for it to find some buyers. If it doesn't find buyers here, where do we go? 309, 310. Still significant fall off can happen here in the NAS. So it's a tale of two markets from that perspective. Let's now move over to the S&P 500, because this one's going to tell us whether the Nasdaq can hold up or not. And it's all about 4120. We've talked about 4120 to death now. We've talked about this level. We've got 1, 2, 3, 4 levels of support. We've got a 200 simple moving average on the 4 hour. You can see the sell-off that's occurred after the market closed because it's the futures. Let me just quickly click the daily to show you that. There's that extra bit of sell-off that's occurred after hours, and it's all about this level. We get under this level, the bears have regained control of the market, and the bears are back, and they're going to try to push it back down into this zone. Why are they pushing it to 39.64? It all comes back to our analysis we've done over the last couple of weeks, where we've said, hey, we're a little bit far away, guys, from the weekly 20, from basically the mean reversion. We love the weekly 20. The market loves the weekly 20, and it can't stay away from it for too long when you get a huge percentage away. And we've done the percentage analysis quite a few times. So 41.20 remains the key level. We'll be going live tonight to talk about it. I also want to just bring a highlight up to some indices. So I've been talking about healthcare a lot and how I think it's a bit of a sleeper sector. Now, if you buy healthcare, are you going to make money in the next week? I don't know. But what I'm talking about here is the longer term kind of plans. Now, if you think about the middle market into the late cycle, often healthcare does quite well over that time. It beats inflation, etc., etc., etc. So you want to pick the stocks that you're looking at. But it's interesting that biotechnology just broke down again yesterday here, and it started to really decline. So will there be a point of value here in the future where you could get some good opportunity? This is XBI. I just want to bring it up because I think it's good to flick these into our chart analysis every so often and look at sectors. And you'll notice that it's coming down straight away to a point of support. But imagine if biotech goes to 100. So imagine if we get a return back to where we were in September last year. Resistance, resistance, resistance. We're getting 18 price on the entire biotechnology industry. So this would be very cool and certainly a very interesting level to take some advantage of through the mid-cycle. So remember, there's always another opportunity around the corner. Hopefully you guys haven't been hurt too much by the sell-off that's occurred recently in tech. And of course, we'll see you tomorrow with another video, or see you today with, of course, pre-market 1.5 hours before New York Open. See you there, guys. Bye for now. Have a great day.